Hey everyone, John Henry here from School of Trade, and today we're going to be talking about day trading with double tops and double bottom patterns. So double top and double bottom patterns are one of the oldest tricks in the book. Pretty much every trader has heard of them, but they can be kind of confusing in the sense of finding them, seeing how to trade them, getting into the trade, placing your stops, targets, all of that fun stuff. So looking at the double top pattern, really, the best way to find a double top pattern is when we make a new high of day or low of day if you're looking for a double bottom. So for a double top, the first thing you want to find is where we make a new high of day, and you want to look for a reattempt at that high of day. So as an example, right here, we have that first attempt at the high of day, and we get this little bit of a pullback, right? We drop down a little bit, but then we try to give it one more shot, and we have that second test up here. Now, a double top can look a little bit different from time to time, but preferably what you want to see is an exact test, meaning right here it doesn't go one tick above it, not even a tick above it. It tags it immediately and then falls straight back off again. Now that we found the double top, how do we get into it? How do we, where do we put our stops? Where do we put our targets? What do we do with this trade? Well, what you want to do is define, first off, where the neckline is. And the neckline, just like a head and shoulders pattern, would be the low or the pivot low before we went back up again. So this low right there is going to be your neckline. Now, what you want to do is you want to place your entry short at a close below this level, below this neckline right here, which actually happened right there. You can just see that little candle that closed underneath there. That's your entry trigger. Now, alternatively, you could wait for a pullback to, enter in short back at that level again on maybe a wave pattern, but sometimes you might not get that setup. A lot of times you're going to have to enter in a stop just because, it'll trigger you in and then immediately just run straight down into the target before it actually comes up to reattempt that location there where you might actually even get a fill. So your entry is at a stop or a close just below that neckline, which we have right there. Now, where does our stop go? Where does our target go? How do we actually manage this trade? Well, the trade itself, let's draw that neckline up here in NinjaTrader. The stop itself is going to go 3 ticks above this high up here. So the high is at 193, so your stop is going to go just above that to 196 right up here. We'll just switch that to an easy to see color here. So 196 is your stop level, and now that we know where our stop level is, where does our target go? Well, the targets can be a couple different things. You always want at least a first target of a 100% extension. And what that means is we're going to take the Fibonacci extension tool, we're going to measure from the low to the high, back to the low again, and we can see right here, this is our target right here at 100.47. So that's going to be the first target, which we filled pretty much no problem. So we were entered in right there on that close below that neckline, immediately runs off after a little bit of fluctuation, runs straight off into our target area right down here. That's T1, that's the first target. Now we do also have the option for a second target, and the second target is actually just a 200% extension, which would be down here at 124, and that's the second target. Now, when you fill this first target up here at 147, you want to move your stop from up here at 196 right down to break even to lock out the rest of the risk. That way, if it does fluctuate or come back, you get stopped out for no loss and you just make the profit on that first target right down here. If it does decide to continue to fall, then you've got this next target down here for T2 to pick up the slack. And sometimes it does run down there, sometimes it doesn't. In this case, you can see it actually went into the next day, fluctuated around, and then reversed from there. And that's why the 100% level is typically the strongest area. But you'll see these high, these double tops, double bottom patterns all over the place. But again, you want to see them after we've made a new high of day and then a reattempt of that location. Those are going to give you the best setups, really in total, that you can really try to ask for in terms of a trade setup. So that's going to be trading the double top and double bottom patterns. If you have any questions about it, feel free to shoot an email to School of Trade. And don't forget to check out our trial at schooloftrade.com. Have a good one. Bye.